This is the Unit 6, Consolidated Statement of Cash Flow. So basically, a consolidated statement of cash flow follows the same procedure as a standalone entity's cash flow. However, if companies of different functional currency exist, we have to first prepare the individual statement of cash flow and consolidate the statement of cash flow. You may not know what is a functional currency now, because functional currency will be introduced in the next unit. So basically, a functional currency means the currencies in which the company function. So we'll explain it in detail in the Unit 7. So as I've said before, consolidated statement of cash flow follows the same procedures as a standalone entity's cash flow, except for the fact that some items we never find in a standalone entity's cash flow statement. For example, share of associates' profit. So if we find any share of associates' profits, basically this is a non-cash item. Dividend received from associates is a cash item which will be disclosed under the investing activity, but share of the profit is not a cash item and therefore it should be deducted. Any dividend paid to NCI will remain in our statement of cash flow and therefore it will be disclosed under the financing activity. Basically, we understand that a consolidated statement of cash flow is not only a statement of cash flow, because cash includes not only cash but also cash equivalent. Cash comprises cash on hand and demand deposits, but in addition to the cash, statement of cash flow also includes something called cash equivalent. Cash equivalent are short-term, highly liquid investments that are readily convertible to known amount of cash, which are subject to an insignificant risk of change in value. So basically, a consolidated statement of cash flow will try to classify the cash flow into either one of these three activities, which are operating activities, investing activities, and financing activities. There are two formats of presenting our statement of cash flow. One is direct method and the other one is the indirect method. This is only a format, a method of presentation. Basically, the figures that we will show under the operating activity will be the same no matter we are using the direct method or the indirect method. There will be some inconsistency in the classification of items. It depends on the nature of the business, because for some companies, interest received, dividend received can be their operating activities. This does not apply to most of the trading activities, but this will apply to those financial institutions. But for most of the companies which are trading, manufacturing, basically interest received and dividend received may be classified as the investing activity. The same for the interest pay and dividend pay. Some companies, especially those financial institutions and holding companies, they may classify it as operating activities, but some will classify it as financing activities. As long as it is applied consistently and reasonably, it will be okay. Remember that investing activities and financing activities that involve non-cash transactions, they are not recorded in the statement of cash flow, and it will be reported as a disclosure note if it is significant enough. Some non-cash transactions, say for example, if we exchange the assets such as the parcel of land with another company, this can be a significant non-cash transaction, and therefore we have to disclose. So basically, we follow statement of cash flow, and therefore we complicate it by having a consolidated statement of cash flow. And we follow the same general guideline because we understand that assets equals to liability plus equity. There are only two types of assets. One is cash and the others are non-cash assets. So cash plus non-cash assets will equals to liability plus equity. Therefore, we assume that if liability increase, cash increase, if the others keep constant. If equity increase, cash increase. However, if the non-cash assets increase, cash should go down. This is our general guideline. So the Hong Kong AS number 7 requires that the aggregate cash flow from acquisitions and from the disposal of the subsidiary during the current year, it should be presented separately as part of the investing activity. Because if you have acquired a subsidiary or if you have disposed a subsidiary, your opening balance sheet and the closing balance sheet will have different consistence of subsidiaries. So if you have got a acquisition of subsidiary or disposal of subsidiary, remember that according to the Hong Kong AS number 7, you have to disclose. So now it's about time to take an example. So let's see the example.